Imagine standing on a quiet stretch of countryside road, phone in hand, and seeing the signal bars suddenly spring to life. Yet there is no cell tower in sight. That moment captures the promise behind AST Space Mobile and Iridium Communications. Two very different visions for taking everyday connectivity off planet and into low Earth orbit. AST Space Mobile is chasing a moonshot idea, a space based cellular broadband network that links directly to ordinary 4G or 5G handsets. Its five newly launched Bluebird satellites carry the largest commercial phased array antennas ever deployed, blanketing thousands of low band spectrum cells across the United States and partnering with carriers like AT&T and Verizon to erase domestic dead zones. The intellectual property moat is formidable. More than 3,600 patents and applications protect everything from handset protocols to on-orbit hardware. Yet, the capital intensity is equally imposing. Inflation, rising rates, and the scramble for satellite components threaten margins, while heavyweight rivals such as Starlink hover in the rearview mirror. For ASTS, the prize is enormous market reach. The risk is the cash burn and the race to scale a first-of-its-kind network before competitors achieve critical mass. Iridium, by contrast, already runs one of the world's largest commercial constellations. 66 cross-linked satellites forming a resilient mesh that needs minimal ground infrastructure. Its technology powers mission-critical voice and data for cargo ships in the Indian Ocean, oil platforms in the Gulf of Mexico, and U.S. troops in remote theaters, places where no service simply is not an option. Growth catalysts are less dramatic but more predictable. A new mid-band transceiver aimed at the Internet of Things market. A timing and location service expected to top $100 million in annual revenue by 2030, and steady expansion of the Certus broadband platform. The Department of Defense remains a reliable anchor customer, and a pipeline of aviation, maritime, and land mobile products keeps adoption ticking upward. Still, tariffs shave margins, rival networks drive down prices, and in a world that relies on always-on links, cybersecurity threats never sleep. Then come the numbers. Wall Street's consensus sees AST Space Mobile's top line multiplying more than 13-fold in 2025, but earnings per share are projected to fall by roughly half as spending ramps. Iridium's forecasts are quieter, mid-single-digit revenue growth, and a high single-digit EPS rise, yet its profit trajectory trends in the right direction. Over the past 12 months, investors have rewarded ASTS with a dramatic rally of nearly 270%, dwarfing both the satellite services peer group and Iridium's own 15% climb. Valuation tells the other side of the story. Iridium trades at a little over 3.5 times forward sales, while ASTS commands more than 68 times, a gap that prices in a great deal of future execution. Both stocks currently sit at a Zacks rank of hold, signaling neither flashing green lights nor red alert warnings. The choice, then, hinges on investor temperament. AST. Space Mobile offers a big bang vision with outsized upside if its network scales and handset partners convert coverage tests into paying traffic. Iridium provides incremental, defensible growth, underpinned by proven technology and government contracts, at a multiple that leaves room for compounding rather than perfection. So, which satellite connectivity bet makes sense? If you prize transformative potential and can stomach volatility and near-term cash burn, ASTS may fit the bill. If you lean toward steady cash flows, established customer relationships, and a more forgiving valuation, IRDM looks the safer orbit. In the end, the sky is wide enough for both models, but your portfolio's risk tolerance will decide which constellation you fly with.